Washington H. Soul Pattinson, Soul Pats, is likely a business many investors who invest in Australia would have heard of before. As one of the oldest listed businesses on the ASX, Soul Pats has a reputation for conservatism and safety. That reputation is aided by a 20-year stretch of increasing dividends. Yet this is a business that breaks plenty of rules. Soul Pats' portfolio is highly concentrated yet wildly diverse. There are no obvious synergies. Management makes none of the platitudes common in businesses this size, and they unapologetically own 39.9% of New Hope, one of the largest coal miners in the land. Other investors may know it for its major cross-holding with other long-standing diversified building products manufacturer and surplus manufacturing property developer Brickworks, of which Soul Pats owns around a 40% stake. Soul Pats describes itself as a long-term investor with a strong focus on earning returns for its owners. It does this via controlling or passive investments in a range of companies across a broad swath of industries. Soul Pats can be considered as a listed investment corporation and comes with a track record dating back to 1903 that few can match. Soul Pats has been superbly managed by the Milner family for generations. It has demonstrated a long history of conservatism, smart capital allocation, and genuine long-term thinking, which has beaten the market by around 5.4 percentage points over the last 6 years. Long-term shareholders of Soul Pats have been well looked after, with an investment in the company increasing 10 times over the last 20 years, or at a CAGR of 14.5% over the last 40 years, making Soul Pats one of the most successful long-term money managers in the country. The major influence on earnings is what the company refers to as its major strategic investments. These include significant stakes in businesses like TPG Telecom and its spin-off TUAS, Brickworks, New Hope and Apex Healthcare. Together these investments have a market value of $4.1 billion as of January 2022, contributed approximately 45% of the company's pre-tax net asset value, and generated $88 million in cash flow for the first half of financial year 2022. With New Hope printing cash, and cash flow from TPG and Brickworks holding up, we expect continuing strong cash flow. That base allows reinvestment the large caps portfolio. Soul Pats investments in companies within the ASX 100 index, filled with sensible names like BHP and CSL. It had a market value of $3.4 billion as of January 2022, bolstered by the merger with listed investment company Milton, which completed in October 2021, and adds another $37 million in cash flow. Rounding out Soul Pats' total portfolio are investments in private equity, valued at $650 million as of January 2022. These include Amp Control, Round Oak Metals, Agricultural Investments, and a swim school. These only represent 7% of the portfolio but generate rich cash flows and latent upside. A smaller portfolio of listed growing businesses, worth about $530 million, aims to do the same with investments in companies like Unity, Aurora, Novonix, and EOS. Some of these are interesting, others are questionable, yet each is a growth option. Soul Pats has also built exposure to structured debt, $360 million, and property, $174 million, too. Although relatively small when accounted for on a direct basis, Soul Pats' exposure to property is more substantial when considering Brickworks' significant real estate holdings and its joint venture with Goodman Group. An investment in Soul Pats isn't just a high likelihood of rising dividends, it's an instant portfolio that is well diversified, generates oodles of cash, and is carefully curated by attentive management. Soul Pats' history, a single year almost seems trivial. Yet the highlights of half-year 2022 and key results for financial year 2022 are summarized as follow. Note that profits and revenue aren't on the table. As an investment company, the accountants make statutory profits meaningless, and we consider cash flow, dividends, and growth in asset value the key measures of success. All were up. Easily one of the most exciting changes in the Soul Pats is its merger with Milton Corporation, another LIC with a long and successful history dating back to the 1930s. The merger provided Soul Pats with a major increase in scale through Milton's $3.7 billion in assets, which consisted of around 97.3% domestic shares, 1.3% property, and 1.4% cash. The merger also provided Soul Pats shareholders with greater portfolio diversification, additional liquidity for future investments, and higher cash generation from increased portfolio dividends. Pats plays a good game when it comes to dividends, but it also has an impressive track record to back it up. The company's latest interim dividend, for the first half of financial year 2022, paid out in May, was 11.5% higher than the dividend paid in the prior corresponding period. The payout also represented the 24th consecutive increase in interim dividends paid by the company, which have risen by a compound annual growth rate of 8.2% PA over a 20-year period. What's more, in its more than 100-year history, it has never failed to pay a dividend. The scale and the maturity of Pat's business makes it hard to consider it as a high-growth investment. However, the company's recent results have us viewing the company in a whole new light. For the first half of financial year 2022, the company produced underlying net profit after tax of $343.7 million, an increase of 281% on the PCP. This was driven primarily by increased commodity prices for New Hope and Round Oak, property profits in Brickworks, and higher dividend income from the aforementioned Milton merger. Pleasingly, net cash from investments and cash flow per share also increased 114% and 42% respectively compared with the PCP, which bodes well for the company's future dividends. In its first half results for financial year 2022 in March, Pat's management calculated the company's pre-tax net asset value at around $9.04 billion, which equates to around $25.04 on a per-share basis. Higher profits from New Hope and a one-off bonanza from the property segment in Brickworks drove most of the increase in Sol's net profit, which rose 155% from financial year 2021. Surging coal prices are directly feeding into Pat's. The business declared a special dividend of 15 cents per share based on the profits delivered from coal. Full-year dividends jumped 16% to 72 cents. Dividends have risen every year for the past 20 years. Profits and revenues are less relevant to investors in this business than dividends and asset values. The portfolio's net asset value rose 72% to just under $10 billion, although this includes the merger of Milton's assets. On a per-share basis, net assets rose 14%, much better than the market. Pats will benefit from the flood of cash coming from miners, especially coal miners, and sound capital allocation is a near certainty. Pats owes its success to its investments in a core group of companies. For this reason, it's important to at least be aware of how these are performing to gauge the overall progress, or otherwise, of the company. Many of these businesses have been having a difficult time of late given the recent volatility, so it's no surprise that the market is taking a relatively dim view on Pats. Many of these companies are operating with strong competitive positions, and we believe that over the long term these businesses will perform, and with it we should see an improvement in the Pats share price. A large part of Pat's success can be attributed to steady hands on the wheel, with a very long-term focus keeping things on an even keel on sometimes choppy financial waters. Having a fourth-generation family member at the helm, and a large portion of the family's wealth invested in the company, has certainly contributed to this. It's possible, though unlikely, that a non-Milner family member one day takes the helm. But whatever the case, we would not want to see a significant change to the ultra-long-term focus and value investing style of management. Pat's enterprise value, market capitalization plus net debt, of $11.1 billion exceeds a net asset value of $9 billion, and that doesn't include $500 million in deferred tax liabilities. Fourth quarter of 2022 see the stocks trading around $27, at 1.2x net asset value and a running yield of 2.6%. As an investment company, the value of the business beyond its book value is only in the capital allocation skills of management. In this case, those are worth a premium, but paying too much now will lower future returns. Pats is reasonably priced for conservative investors who value stability and reliability. Conservative investors might consider starting a position here. For most investors, think of this as a quality, diversified instant portfolio that is fairly priced. For those greedy for higher returns, we need a lower price before getting interested. We will look at accumulating the counter at a buy price below $22 and should sell slowly at sell price above $35.